What is Bitcoin and why should you invest in it? Bitcoin has been on everyone's lips every time it dips or hits a new all-time high and becomes the center of the crypto community's interest. It is the crypto that started it all and paved the path to the decentralized future. But what is this Bitcoin? Why is it so special? And should you really invest in Bitcoin? Let's find out. Hi guys, welcome to my YouTube channel, and today's video is about what is Bitcoin and why should you invest in it. If you are already aware of what Bitcoin is, stay tuned as we will discuss why it is an amazing investment later in the video. But for those new to the community, Bitcoin is a decentralized digital currency that was first introduced in January 2009. It is based on the principles presented in the white paper by the enigmatic and pseudonymous Satoshi Nakamoto. The name of the person or people who invented the technique is still unknown. Bitcoin promises reduced transaction fees than standard online payment channels. And unlike government-issued currencies, it's run by a decentralized authority. Bitcoin is classified as a sort of cryptocurrency since it employs encryption to ensure its security. There are no physical Bitcoins, rather balances are recorded on a public ledger that everyone can see, although each record is encrypted. Moreover, a large amount of computational power is used to verify all Bitcoin transactions, a process called mining. Bitcoin is not issued or supported by any banks or governments, nor is it worth anything as a commodity, despite the fact that it is not legal cash in most areas of the world. Bitcoin is extremely popular and has sparked the creation of hundreds of rival cryptocurrencies known as altcoins. When Bitcoin is exchanged, it is typically abbreviated as BTC. Bitcoin brought a ton of revolutionary features to the table back when it started, which still makes it one of the best cryptos to invest in. One such feature was its peer-to-peer nature. Before Bitcoin, the only way to transfer value was through financial institutions like banks, but this is the father of all cryptos was the first peer-to-peer internet money, which means that all transactions take place directly between equal, independent network participants, with no need for any middleman to allow or facilitate them. You might have heard of Bitcoin being mentioned as digital gold. This was started by the famous billionaire Michael Taylor, who is also the founder and current CEO of MicroStrategy. He tweeted, #Bitcoin is digital gold, harder, smarter, faster, and stronger. In fact, MicroStrategy even holds a majority of its assets in Bitcoin. It's possible to compare Bitcoin's worth to that of rare metals, as both get depleted and only have a few applications. Industrial applications utilize precious metals like gold, and Bitcoin's foundational technology, the blockchain, does have some applications in the financial services industry. Bitcoin's digital origins suggest that it may one day be used as a medium of exchange for retail purchases. The correlation with rare metals is just the tip of the iceberg of what makes a crypto valuable. The 6 characteristics of a token that can hold value are scarcity, divisibility, acceptability, mobility, durability, and counterfeit resistance or uniformity. These characteristics enable a currency to be widely used in a market. They also keep monetary inflation in check and make sure that the currencies are safe to use. And Bitcoin is all of those and much more on top of all of that. But so many altcoins have hit the market lately, featuring recent tech advancements like the proof-of-stake consensus model amongst other things. But why is Bitcoin still the most valuable crypto asset? What makes it unique? Understanding this is the key to making profitable Bitcoin investments. The primary fact that the Bitcoin was the first cryptocurrency to exist on the market gives it a distinct advantage. And it has succeeded in establishing a global community and spawning a completely new economy of billions of fans who produced, invest in, trade, and utilize Bitcoin in their daily lives. This is especially evident when you realize that the project has a market cap of more than $730 billion. Today, the cryptocurrency sector is estimated to be worth more than $2 trillion. The concept of which was pioneered by Bitcoin. The introduction of this first cryptocurrency established a conceptual and technological foundation that sparked the creation of thousands of competing ventures. But isn't Bitcoin already saturated, or will it grow even more? Let's take a look at what the experts predict. The majority of experts are bullish about Bitcoin. Some, such as Wallet Investor, believe that the price of Bitcoin will reach almost $150,000 in the next 5 years. An algorithmic price prediction website, Digital Coin Price, stated Bitcoin price forecast suggested by 2022 that the price of Bitcoin could climb up to about $64,157.39 projecting the possible scenario of crossing the 100K mark in the next few years. GOV Capital also predicts Bitcoins would reach an all-time high of $129,000 by Q1 of 2025 and $185,000 by December, with a yearly average of $131K, considering the value of Bitcoin is hovering around $38,000 while making this video. That is a gain of more than 300%. But now I hope it's a pretty evident thing that it's never too late to invest in Bitcoin. It is the digital asset that keeps on giving. While we are talking numbers, let's look at the tokenomics of the world's greatest crypto. The Bitcoin price has been hovering around $38.8 thousand for a few days, with average daily trading volume activity of more than $27 billion. This gives the coin a market cap of $750 billion, making it presently the most valuable cryptocurrency in the world. There are currently a little over 19 million BTC in circulation, with a maximum supply of 21 million BTCs. The total supply of Bitcoin is capped by its technology and will never surpass 21 million coins. At this moment, you might be thinking, is the Bitcoin network secured or not? So, the SHA-256 algorithm, which is part of the SHA-2 family of cryptographic algorithms, is used to protect Bitcoin and its split Bitcoin Cash aka BCH, as well as many other cryptocurrencies. If malicious actors wanted to compromise the blockchain, they would need access to at least 51% of the systems running the blockchain. Considering the geographical isolated nature of decentralized nodes and the sheer number of Bitcoin nodes, taking advantage of the system is next to impossible. On the surface, the crypto market appears to be growing at a rapid pace. Also, more and more companies are launching crypto-related products and services. Fendi, for example, is collaborating with Ledger to release a crypto wallet, while Twitter has featured NFT profile photos. Nonetheless, many experts are beginning to doubt the technology's long-term sustainability. While much of the public's opposition to new technology can be explained away as fear and misunderstanding of anything new, many experts are hesitant of investing in crypto due to increasing restrictions and environmental concerns regarding the technology. Remember when I mentioned proof of stake? Proof of work was the older consensus model where the work was done by the miners, people maintaining and running the blockchain on their system across the globe. Miners are compensated for their computational resources with rewards for each successful block added to the blockchain. The reward per block was 50 bitcoins at the time of blockchain's introduction. This figure is half every 210,000 new blocks mined, which takes the network about 4 years. The block price has been reduced 3 times by 2020 and now stands at 6.25 bitcoins. Well, Bitcoin mining consumes a huge amount of electricity as it needs electricity to get mined. So over the past few decades, people have been more curious about their energy usage and personal effects on global warming. When news headlines started spinning regarding the possible detrimental impacts of Bitcoin's energy use, people were anxious about Bitcoin and opposed this energy usage. According to research, each Bitcoin transaction consumes 1,173 kWh of power, enough to power the average American home for 6 weeks. According to another report, the annual energy consumption of Bitcoin is greater than the annual hourly energy consumption of Finland, a country with an estimated 5.5 million people. On the other hand, stake-based systems use a fraction of the energy Bitcoin uses, as they were developed with efficiency and environmental sustainability in mind. So what do you think? Will Bitcoin remain as the king of all cryptos, or is it too late to invest in proof-of-work-based systems? Are more efficient proof-of-stake networks a better alternative? Let us know in the comments below. If you found the video interesting, go ahead and hit the like button, and if you're new here, subscribe and click the bell icon. This way you'll be notified of all the future crypto and NFT news. We'll see you in the next one. Until then, peace.